Hello, I'm Rhonda Porter. I'm here with your weekly mortgage market update for the week of November 18th, 2024. Mortgage rates for 30-year fixed are hanging around just under 7% as of Friday, November 15th. This is based off of Optimal Blue's survey that they do with the lenders that use them for locking in mortgage rates, which is about 35% of the market. But this is an average. We don't know how rates are priced, whether it's with a point or no points, and what someone's credit scores are in order to obtain these rates. So I just share this with you in order to kind of show you a trend of where mortgage rates have been and where they may be heading. On this week's economic calendar, we have a lot of housing data. We also have the Philadelphia Fed Manufacturing Index on Thursday and consumer sentiment on Friday. Speaking of housing, the average homeowner's net worth is 42 times higher than that of a renter. You can see this on this chart, but the benefit of homeownership continues to rise over time. So homeownership builds a significant long-term wealth and works as a hedge against inflation. This is a rent versus buy report that I created recently for a client. This compares renting a home at $3,000 per month to buying a home priced at $615,000 using a 10% down payment. And at first glance, it looks like you're ahead renting during this time frame, which is 9 years, I believe. And so the cash flow difference would be roughly $94,000, a $435. But if you factor in what you gain with appreciation and amortization, which means paying your own mortgage versus paying your landlord's mortgage, the net gain actually by year 9 is closer to $295,000, and this is factoring in deducting in that $94,000 that we have for the cash flow difference, and also factoring in that you're selling the home at 9 years, the cost for that, and the cost for buying the home. So there is a significant difference. So please contact me if you'd like me to prepare this for you. It's around 11:30 as I prepare this report, and mortgage-backed securities, what mortgage rates are based on, are currently pretty flat. We're up about 5 basis points. In a speech last Thursday, Fed Chair Powell indicated that they're not in a rush to cut rates, stating that the strength we are currently seeing in the economy gives us the ability to approach our decisions carefully. So the odds of the Fed cutting the funds rate by 25 basis points is now at around 62%, which is down from 77% just 1 month ago. And we can kind of see that reflecting in the rates since following the election. The holiday shopping season is upon us, and I've put together some tips for you to help you during this festive time. So some of this is going to be pretty obvious, but there's some things I would really like you to consider. One is avoid opening new credit cards or debts. That really hits your credit score pretty hard. Even if it's a zero interest or if it has delayed payments, it still does factor on your credit. And if you're buying a home, the pay later accounts that they offer, it's going to be pretty popular right now, also factors into your debt ratios. And I encourage you to pull out your most recent credit card statement, check out to see what your current interest rates are and see what your credit limit is. You'll want to try to keep if you're spending below 30% of your credit limit if you're trying to optimize your score, and make sure to make on-time payments. Please contact me with any questions about this. And I hope you have a great week. If you're thinking about buying, selling, refinancing, or restructuring some debt, maybe remodeling, or even selling a home, please reach out to me. I'm happy to help you or anyone you know. Take care, and I hope to talk with you soon. Bye-bye.